Hello and welcome to another edition of Who Moved the Market. I'm Surabhi Upadhyay. Well, if you've got the national or international business news headlines in the last 24 hours, you might have noticed that there is a growing expectation around some sort of a stimulus that may come through in China. Now, largely this is a lot of speculation right now. We're seeing some reports that maybe there is a cut in the deposit rates across many of the big Chinese banks. Why are we talking about this? Well, the reason we're doing that is that some of this is already beginning to make its presence felt in the commodity markets. If you see metal prices, if you see actually even metal stocks listed right here in India, there is a higher bid, an upbid. So what is this expectation all about? How could it potentially impact the commodity complex and therefore also equity stocks which are linked to commodities? We have our resident in-house expert Manisha Gupta to help us with all of this and more. Manisha, welcome to the show.
Thank you, Surabhi.
Well, I've already given a long preamble. You know what's coming. So yeah, the moment we hear China, we sit up and take notice if it's got anything to do with commodities. What is this latest stimulus talk all about?
If you remember, we started this year with a lot of hope and sentiment strong, expecting China to come back. The minute China said they're taking away most of those COVID restrictions,
measures,
market thought this was the time for the metals to run up. And it did for some time as well, because the highest that we've seen metals trade in this year has been in the month of January after China made those statements. But then each data that kept coming in kept showing you that the recovery isn't so even. It was very fragile. It's not even catching up. It's not sustainable. There's once in a while a number that shows you that China is coming back and the next number shows you it's not. So is the reason all that you said right now about China talking about cutting RRR, interest rates, coming out with cash liquidity rather, and also about, coming out stimulus to ensure that the domestic demand is supported and that you also have property which is declining by the month see some support.
Yeah, absolutely. So I think I was reading through this and there are two sets of expectations. That one, maybe they do monetary stimulus, like you're saying with the reserve ratio, some kind of a rate cut, some straight outright liquidity injection. That's one. The second is their property market, because I think that's where, as you're mentioning, there's been a lot of sluggishness. If they do, by the way, if they do any property stimulus more directly, I guess it has an even more direct bearing on, the way metals trade. So while we await more clarity from the Chinese regulators and the government on this, let's look at what's already happening in the commodity markets, Manisha. You were telling me ahead of the show that a lot of, metals, iron ore, they're already starting to move up.
They have. So I'll start with the ferrous metals first. And if you look at the steel prices, we were trading at a 3-year lows in the last week of May. From there to now, we have seen the prices gain up by nearly 8 to 10%. If you look at the last 1 week itself, the steel prices are up by 5%. And nothing really has moved. When you look at the Chinese trade data that came in yesterday, the export numbers and the import numbers both are into negative. The stimulus, or rather the surplus, has shrunk to the lowest in 13 months. So there's nothing that came out in the last 24 hours tells you that there's anything exceptional happening in China. But the last 1 week, all the metals have run up only because markets are anticipating that China will do something. So you have steel prices come off 3-year lows. Iron ore prices are trading at a 6-week highs right now. And in the month of June itself, which is 9 days, we have seen iron ore prices gain up by 10%. So ferrous metals are rising only on expectation that something will come in the property sector.
So you're saying steel prices are off 3-year lows. I mean, in this rather disappointing opening, Chinese openings, they'd actually fallen to 3-year lows.
Yeah,
and now we're seeing a pickup. By the way, if you're looking at listed Indian metal stocks, particularly steel stocks, that explains it, why the likes of a JSW Steel, a Tata Steel, a lot of these stocks have been running up today on Thursday between 1 and 3%. Iron ore, you said, is up 10% in just a week. There's no other trigger apart from...
Because there is enough and more supplies coming in from Australia and Brazil. And China off-port inventories are enough. It's only the expectation that something will come, the ground demand will start picking up. And you have seen that sentiment already work in the prices.
Wow. I mean, that is phenomenal excitement already in anticipation of a move. By the way, I must point out to our viewers that while the world awaits stimulus from China or in China, 2 central banks really surprised markets today around the world with unexpected, rate moves on the upside, rate hikes. We're talking about the central banks in Canada and in Australia, I believe, right? So how is this kind of working its way in the commodity markets, whether it is ferrous metals or base metals? Are people talking about it?
They sure are, because interest rate hikes is not something that markets on ground like, and commodities for sure, because that would mean, we all know, higher interest rates doesn't augur well for the economy, and metals clearly are seen a decline because of that. That is one reason you haven't seen the metals run up too much. It's keeping the prices in check, these interest rate hikes. We also are looking at the dollar gaining. Treasury yields are on the higher side. 14th June is the US Fed meeting. 13th June is the US inflation numbers coming in. So the next week promises to be even more volatile. The only expectation is that before that comes, you will have seen China react.
Okay, so I guess
too many hopes.
It's a lot hinging on central bankers and who blinks first. Will the Fed, stay on a long pause? Will they hike, a surprise hike? So I guess there's a lot. I mean, it promises to be interesting and volatile. But let me ask you about base metals as well, Manisha. I remember you telling us just a couple of days back that irrespective of the price action, LME inventories are really loaded up, right, in terms of just LME warehouses. So what is happening with these base metals and what are the push-pull factors there?
So, if you take one by one, look at the copper prices first, and we are trading slightly on the firmer note onto that one as well. Interestingly, Surabhi, week on week, all these metals are positive. Month on month, they're all in the negative because the last 1 month hasn't seen any strong data come in. But the last 1 week, with the noises about China again picking up so strong and so high, is the reason you've seen gains. So copper, aluminum, zinc, nickel, everything is up anywhere between 2 to 6% in the 1 week period. In a 1 month period, they're still down anywhere between 4 to 14%. So that's the kind of moves that we've seen. As far as inventories go, well, yes, zinc inventories in the global markets are just worth 2 days of global consumption. And even then, we've seen zinc prices continue to, stay on the lower side. Last week of
2 days of global consumption. Wait, I'm just like repeating that in my head to make sense. So we have zinc inventories just 2 days worth of global consumption.
That's right.
But still, we haven't seen a massive sort of
the zinc prices in the last week of May were trading at a 26-month lows. They only have started to pick up in the last 1 week, and we are up 5% within this time. Aluminum inventories, again, have seen a very sharp decline. Aluminum inventories, 42% of them are marked for delivery out of LME. And aluminum, if you want to buy aluminum right now, you have to pay $40 as a premium versus if you want to buy it 3 months later.
Okay.
So cash aluminum is more expensive.
Okay.
That is because the inventories are not so strong. So same goes for copper. The demand is very strong. LME inventories are the lowest since 2005. So when you look at the individual fundamentals, there is no reason the metal prices should be where they are. So if that push comes in from China, I think we are done selling. These are good accumulation levels. You could be looking at 2 to 3 to 4% of a decline from here on, but the upside is much stronger.
I think that explains why the RBI governor was extremely cautious in his outlook, saying we need to be vigilant, we need to watch. Though they've lowered their inflation expectations, he said we're not at our targeted level of 4%. So that explains why I think central banks are not being very charitable with their dovish commentary and their cuts, etc. Just a word on crude as well. I mean, that has its own sort of, push and pull factors. And we saw Saudi Arabia cut the output, I think it was earlier this week, just earlier this week. Would China have a role here at all? If, let's say, the Chinese go ahead and announce this big stimulus, will it really impact the crude market?
It would, because China again is one of the major importers of crude oil, and it imports much higher than what India does. So when you look at, when you talk about Southeast Asia, or you talk about Asia for that matter, China is the place you're actually talking about. And the imports here have also declined. So when you look at the last 3 months, we've seen month-on-month decline in sense of imports. Yes, the driving season in the US is about to begin right now. Asia demand growth numbers in percentage times are still on the higher side. But until you see something coming in from China, which is a push to their domestic demand, you still are looking at weaker numbers here. So all street, all tangible commodities at this point in time looking at China.
China, it is. So, okay, just to recap in terms of what we need to watch out for, triggers for the commodity markets next couple of days, at least couple of sessions to next 1 week. China, number one, if there is any stimulus. The US Federal Reserve meeting. Anything else that I'm missing over here?
US inflation on 13th and US Fed meeting on 14th.
Okay, so I think
those 2 days is going to be quite crazy.
We have our hands full then. Okay. Manisha, thank you very much for joining in and making sense of all of these divergent trends that are coming in. China is the key factor. That's the takeaway. All right. Well, folks, hope you found this interesting and informative. I surely did. Do send us your feedback, comments and queries. We'll see you with yet another market theme tomorrow.